Good morning and welcome to the Financial Juice News live morning briefing with your host, Tony. So I just wanted to start off the headlines and the morning briefing with you guys. Just taking a look at the markets and just to see what we've seen so far. So we're seeing some dollar weakness here as there is a movement away from the risk-off environment. One of the reasons being is because of this headline here, which I'll just switch to. I'll show you first, is this headline saying that whilst with the virus war still raging, Feds. So if we just go to one of the other articles, bring up the correct one here. So here we go. From the Federal Reserve, the Fed extends municipal liquidity facility beyond largest cities. So the program will now allow counties with a population of at least 500,000 residents and cities with a population of at least 250,000 to be eligible for selling their short-term debt directly to a special purpose vehicle established by the Fed and the US Treasury. The facility will continue to support $500 billion of short-term notes through $35 billion of credit protection from the US Treasury, and also appropriated from the CARES Act, or the Coronavirus Aid, Relief and Economic Security Act, passed some weeks ago. So this is again Fed pumping in a lot of money to keep the economy up and running and making sure that they fully utilize their power of keeping funding going for the US. So they have $4 trillion or just over $4 trillion of firepower that they can use, and they are using this as much as they can. So don't forget, you're ready have from Congress over $3 trillion so far of funding, or around $3 trillion to protect the US economy. And you've also had the Fed as well pumping in a lot of cash, cutting rates, providing those overnight repo operations when they ramped it up. The highest point to what it got to was at $1 trillion per day for US repo operations. So that was quite a key significant thing from the US Federal Reserve, and we're continuing to see that there. And again, I'll just go back to the market reaction. This is why we can see the risk-off sentiment peeling away here. You can see the dollar weakening here within this time frame. So even though the news came out at around it came out last night at around 1 in the morning, the reaction here from the dollar showing that the risk-off environment has moved away to more of a risk-on environment. We're not completely out of the head yet, but from what we can see here, there's a strong movement away from the dollar. As you can see, pound, or if we look at the cable, that's continuing to appreciate in value, again off the back of the news of the Fed pumping in money to keep the US economy safe. And also the euro moving towards the upside as well, trading at 108 as well, from around 108.5 to 108.8. If we look at the FTSE as well, that's also trading higher as well. Business consumer sentiment has come back into the markets. If we look at ES futures, we're not seeing too much of a huge reaction from ES future. Well, actually here, this is where we can see some. If we're looking at an hourly chart, you can still see that we are hovering around this level of resistance. But what we can see is that there has been a continuation of movement towards the upside, and that's also helped by the Federal Reserve's actions, as what they had taken yesterday, as what they had done last night as well. So if I looked at a minute chart and just zoomed out, and we'll get to 5 minutes just to capture that headline. There we go. So there we can see some more movement towards the upside that's continuing to be sustained there as the Federal Reserve pumps in more cash into the economy. So the article that I want to go back to is this one here. So from the Federal Reserve, so Fed peers with a virus war still raging, Fed peers are out of the foxhole. So Fed's Bostic, who Atlanta Fed, says, I am looking at the public health response and how we manage that. As long as the virus continues to spread, we will need to continue to separate and keep the economy in some state of lockdown. What he's essentially saying here is that the Fed understands that the number of coronavirus cases is going to see a pickup and the mortality rate is going to pick up. But what they're looking for is a response from healthcare and the government, how they control, and federal and local governments, and also how does the administration react to the coronavirus? What is their response? The Fed have already done their job of cutting rates and pumping in, and they continue to pump in money into the economy. But again, for them to see any sort of pickup back in confidence, again, as I said, that's down to how the governments or the government in the US reacts to the coronavirus. So if we do see some more testing or mass testing being done, I think yesterday it was with the US about 5 million tests have been done so far of coronavirus. But not only does mass testing need to be done, there's also the need for having enough PPE equipment, making sure the hospitals are fully adequately supplied and that they're not on the brink. And you have systems that are put in place for people to be able to accept their initial or their unemployment claims as well in a smooth and quick way. Now that's not happened so far. We've seen a lot of delays for people being able to claim uninsurance claims. That's due to the way that the system was run, that it's not made to handle a lot of people at one time to apply for uninsurance claims or unemployment claims. So that's one of the issues there, and that's again one of the things that that Fed's Bostic is going on about here. Just to add from his point of view. Now, if we're looking at some other articles as well, if we take a look at oil. So, oil continues to tank as storage fears persist and commodity giant BP warns of shock on a scale never before seen. So BP, ticker BP, chief CEO Looney told Reuters his firm expected global oil demand to drop by about 15 million barrels per day in the second quarter due to coronavirus-related restrictions. So again, this is something you've got to remember, that OPEC has decided to cut oil production by 10 million barrels per day. And also you have we also have the rest of the world leaders also agreeing to try and curtail oil production. But is it enough? According to BP, then that's not going to be enough. You're still going to have this, we still have this huge glut of oil that we have. So oil prices fell for a second consecutive session today on fears that global storage for oil is running out. Again, that's Cushing, Oklahoma, one of the areas which is quite key for storing oil within the US. So if we have a look at the charts, WTI crude oil current contract sitting at $11.36. So that's where we can. So we're just going to continue to see this movement towards the downside, as we are seeing for the foreseeable June contract. You can see there's more strong selling momentum going on here, even though there is a bit of a pickup from around the time that we had the news of the Fed pumping in money. But after that, we're seeing this continuation of a downward movement. So we most likely or potentially could see that continuation of a downside movement going back to 2001 lows again. Okay, so one of the things that I wanted to show you as well, going back to Cushing, that's quite key as to just show you what's happening so far. If I just bring up that little image for you to have a look at as well with me. Okay, here we go. So this is where we currently see Cushing crude stockpile, and it is surging. So the stockpile within Oklahoma sits at around 77 million barrels. 77 million barrels. Now, what we can see here is that we're nearly we're nearly getting there. As you can see here, so back in July is when we kind of reached around the peak, around here, around its peak of oil supply at around 50 to 55 million barrels. And then we saw this depreciation in the stockpile. And now we're seeing this resurgence again, a much stronger resurgence compared to October when we saw stockpiles being raised. But this again, we're seeing huge amounts of oil being kept in. So as of potentially, if we're looking at May or the end of May or beginning of May, is what a lot of economists are forecasting for stockpiles to be filled within Cushing, Oklahoma, of 77 million barrels. From here, that's a decision that you guys can make. From what I can see, that looks like we are nearing that capacity very, very quickly. So that's a given there. Okay, if we go back to the charts, well, let's bring up again here. As I said, oil prices are pretty low. There isn't a market expectation for demand to pick back up as soon as others had hoped, or as soon as the market had hoped. So again, you're going to continue to see there's low oil prices as we continue to navigate our way through this area here. Now, one of the key things that I want to show you, one of the articles that was quite interesting, is talking about how some oil traders are putting their oil into oil tankers, into Jones Act tankers for storage. So if I show you this here, this article, so traders book Jones Act tankers for storage and foreign trips as US fuel glut swells. What's happening here, okay, is that oil traders are hiring expensive US vessels, normally only used for domestic shipments, to store gasoline or ship fuel overseas, according to 5 shipping sources. So there's a lack of space to stockpile oil. And this is one of the key things, as we can see here, factually, according to 5 shipping sources, that there is a movement to chucking oil storage onto these tankers. And the problem is these are quite expensive. They cost about $70,000 a day to keep your oil in one of these tankers. So this is what we can see here. Again, oil crisis of oil glut happening where there's a lack of storage. This is quite a significant thing. So again, so just a reminder, there's been a 30% drop in worldwide demand for crude oil. So again, if we just keep that in the back of your mind, let's have a look at another article, which is quite interesting. Now, if we're talking about oil demand, and if we look to China as it's coming back up, let's bring up that article and discuss that. So this is an interesting report that I had found this morning. So from ICIS reports, which is this was done at the end of last month, or this was done today. What it shows is that China expects a further recovery in Q2 despite external headwinds. So China itself, as a nation, is going to be bringing back up its production. China is bringing back up its production. As we can see here, as of April the 21st, 99.1% of China's major industrial enterprises have resumed production, and 95.1% of employees have returned to work. And the corresponding rate in Hubei province was 98.2 and 92.2 respectively, according to an MIIT spokesman. Huang Liban said at a news conference in Beijing on April 23rd. So this is one of the key things just to look out for, is that as production near enough has come back, you'll expect more demand for oil to come back from China's side. And this is one of the key things just to keep in the back of your mind. Now, this is what we see here at the moment. Okay, this is quite interesting. So if we're looking at the oil production or crude oil production altogether, and also gasoline production, what we can see from this little graph here is that there was a significant rise in the amount of gasoline inventories from towards the end of January. And then as China went into lockdown, and again, near enough dropped off. And this is where we currently sit at the moment. So around 300,000 tons, or 300,000 tons is what we can see here from gasoline inventories of gasoline and gas oil inventories of Shandong Independence. You can see that drop off, and it's going to take quite a bit of time from what we can see here for oil demand to slowly pick back up. But one of the other issues here is that from the article, if I just bring it up for you. So Chinese refiners plan to export about 2.5 million tons of gasoline and gas oil in April, a significant decrease of 32% from March, and also a decline of 21% from a year before, according to ICIS data. So Sinopec export-orientated refinery even slashed its jet fuel exports for April by 75% from the previous month. So if China is coming back online, but they're having issues with the drop in demand for oil, this is so one of the scenarios is that if China is struggling to produce export oil to other nations, what does that do for its revenues? Well, that of course is going to take a huge hit in this short-term scenario that we have of dealing with other countries going into lockdown as China opens up. It's as if you've got a scenario where you've opened up a shop, everyone's been buying from you, and then suddenly you close down, so everyone stops going to you. And then as everyone else stays at home, your shop opens up again, but there's no customers. So this is the scenario one of the scenarios that we see where China continues to see no real significant amount of customers as to what they had pre-coronavirus levels. A positive case scenario is that we do see a slow increase in the amount of oil consumed, not produced by China, but the amount of oil consumed by China to help keep industries and production at 100%. So that's a positive case scenario where you see oil being eaten up by China to produce goods. However, those goods, if there are some issues where there are any sort of restrictions, which there aren't at the moment, but if nobody's buying goods, that's just as countries are looking to protect their economies and are being more are being more protective of their economies, you're not going to see too much buying of foreign goods or services, as that money would go towards pumping money into local businesses and local counties. So that's one of the so that's a bad case scenario for China, where they're producing these goods and bringing back services, but the demand for those products and for those goods and services is not being matched by the rest of the world. So again, you're going to see this effect where you'll have to wait. One of the scenarios is where China would have to wait for the rest of the world to come back online, and start buying up goods and services from China. Okay. And then you can start to see as we've seen here from the article, the plan to export that gasoline and gas oil in April. You'll start to see that pick up, and then that's where you'll see the economy come back to normal. So again, now that's China's side. They're bringing back up production to near full capacity. Here's the issue. Okay, now if I go to the next and the final article that I want to show you of this. Okay, this is quite key. Now, Russia's energy minister Novak hopes that when China comes back fully, it will start to use more oil to help balance oil markets. So this is back in 2018, so it's probably going to be slightly higher in China's oil consumption. Their oil consumption back in 2018 sat at around 13 million barrels per day. Okay. Now, if OPEC has decided to cut production by 10 million barrels per day, and China's oil consumption sits at 13 million barrels per day, or slightly higher, then that's pre-coronavirus crisis levels, then that's a positive sign that China can start to slowly eat into. It was a positive case scenario where China starts to eat into the oil glut and clears away some of that space for oil tankers and oil to be put somewhere in some sort of storage, wherever it may be, on a Jones Act ship or a vessel, or within Cushing, Oklahoma, or in the sea somewhere. However, and this is a negative case scenario, as I said just earlier on, is that when we had the coronavirus outbreak happen, China's oil consumption dropped by over a million barrels, okay, a day. So it dropped down to 12 million, around. If we're talking about current levels, it could be around 14 million. Now it's dropped back down to around 13 million, or just over 13 million. So that 10 million barrel a day cut is not one. It's going to show that, and the buying from China is not going to be enough. You shouldn't expect China to come back straight away and buy 13 million barrels of oil straight away. That would be quite crazy for them to do if nobody else is going to buy their goods or services. But according to BP, if the oil demand has fallen by 15 million barrels per day, then it still leaves a huge gap for the rest of the world for China to try and power up and eat as much oil as they can. Okay, so you're going to see the mixture of different scenarios here. So positive case scenarios where China eats into that demand, and a negative case scenario where it's not enough to eat into that demand. So some economists are saying that there was a drop in demand by 30, according to the IEA or the EIA, that the drop in demand is by 30, about 25 million barrels per day, which is if we're going to rely on China, according to Novak, we're well away from that, well away from that glut that we need to catch up with. Okay, so that gives you your morning briefing for the day. Economic release wise, nothing much. It's quite quiet today, other than US consumer confidence. Don't expect too many positive figures to come out, as of course the US has, is dealing with the coronavirus, and we are at our peak at the moment. until we reopen the economy, if when that happens completely. And that's it. That's all we have. That's the only significant release that we have for the day. Okay, thank you very much for watching the live stream. Don't forget to like, share, and subscribe to the channel. And keep your eyes peeled for us, because we're going to be back up again at 8 a.m. Eastern Time. Thank you very much. Okay, goodbye.